Hey, good morning, guys. This is Russell for us for this minute of taxes. This daily video that I decided to start making for you guys. It started yesterday. Today, I have a very important topic to share with you guys. The question is, what is earning income tax credit, and how does it play in making you receive higher income or owing a higher tax bill? If you don't know yet what the answer is, connect and let's start. Okay, so basically, if you're new to this channel, this is a new program that I decided to run during this tax season. Even though our specialization is tax planning, that means helping you saving taxes for the next year. Not for now, because for now you have so many little room if you want to pay less taxes. I know a lot of people go to the tax profession, they say, oh, you know what, I want a lot of return. They plan nothing. If you plan nothing, there's little to nothing that your CPA actually can do for you, rather than claiming things that will actually back up against you, okay, backfire against you. So this is the reason why I think it's better to educate people. But now, during the education, at this time, even though you didn't plan nothing, you still need to know how your tax planning or tax preparation is conducted. I know maybe a lot of CPA or tax professional might not agree with me, but I think the customer should know what is going on his tax return or what we have been doing on it, and let them understand what is actually happening, or how do they come up with what they receive or what they owe. To me, it helps me. I don't know about other CPAs out there as a tax professional, but it helps me because it lets you understand whether you receive $50 refund or you receive $10,000 refund. You know why you are receiving that refund, or whether you owe $50 or you owe $10,000 as a tax bill. You know why you owe that money. That's the reason why I'm trying to educate my people. Okay, so today we have a really important topic. If you don't know what earning income tax is, that means you think your tax professional is I don't know, he's a genius. He's making you receive a lot of money that you don't even deserve, maybe, or he's making you receive some money that not other tax professionals can help you to receive. Okay, the earning income tax credit is the bigger metric that will help you to receive more income or lower income, or pay more taxes or lower taxes. So what it is actually, the government basically want to encourage, incentivize people to go and work. So if you go out there and you work, that means you earn money, earn income tax credit. Whenever you go out there and you work, you make money, then they're going to give you some credit. It's actually what is called refundable credit. Refundable tax credit, that means they will give it to you in dollar amounts. Some tax credit are what is called non-refundable tax credit. That means they can only help you to reduce your tax bill. If you're supposed to owe $10,000, you have $3,000 non-refundable tax credit. It's going to reduce that. But if you have zero taxes, they will not give you the $3,000 credit. That is what the difference between refundable tax credit and non-refundable tax credit. Maybe it's gonna be another topic, but my thing here was to explain to you guys what the earning income tax credit. The government wants you to go out there and earn money. Earn money. I mean, you have to work, whether you are working for someone or you are self-employed, but they want you to work to earn something. If you earn money, then you receive that credit. Okay, how does the credit works? The credit increases as your income increases. Okay, of course, it increases as your credit increases, as your income, your taxable income, your earned income increases. But at a certain level, it caps and it fades out. That means it start at one point it starts decreasing instead. So it increases as your income increases. Then you get to the peak. If your income continue to increase, that earning income tax credit start decreasing. Your incomes continue to increase, your earning income tax credit start continue to decrease. At one point, it becomes zero as your income continue to go up. Okay, That's actually the how it works. You can see that your earning income tax credit will increase and your refund will increase as your income increases. But at one point, as your income continues to increase, that earning income tax will decrease. That means your refund will actually decrease. It depends on where your income tax is. Depending on what your income tax is, you should receive a higher or lower tax return, or higher or lower tax bill. Okay, just once I told you how it works, now I can tell you how it phase out, because you also need to know, because you may be working and say, oh, last year I got this refund, this year why is I don't have the refund? Sometimes it will be that the level of your income puts you out of your earning income tax credit. And I'm going to share with you what is for 2020. Okay, 2020, what is the phase out, and and how do you phase out with your earning income tax credit. I'm not going to go into how much you receive as your income is 5,000, 10,000, 20,000, no, but I'm going to let you know how much your income should be for you to have zero income tax credit. Okay, I'm gonna tell you how much your income tax should be for you to receive zero income tax credit. I'm also tell you what could be the maximum amount of earning income tax credit. Okay, depending on where your income is. Okay, so right now, what do we do? The earning income credit will be given to people even with zero dependent. Of course, as you have zero dependent with the same level of income, if you have one dependent, it will be different. It will be actually higher. If you have two dependent, your earning income tax credit will be actually higher. You have three dependent, your earning income tax credit will be actually higher, given the fact that your income is the same. Okay, so if you have income level of $20,000, 4 people have income of $20,000. One person has no dependent. His earning income tax will be different from the other person who made $20,000 with one dependent. The third person will have a higher earning income tax credit than the person who has only one dependent. The person who has two dependent will have an earning income tax credit that is higher than the person who has two dependent. I'm saying again, depending if you don't phase out. If you phase out, none of you guys receive nothing. Okay, so if you have zero dependent, that means you are just a single person. If your income reaches $15,000, $15,980 for 2021, of course it changes from year to year. If it's the case, then your earning income tax credit will be zero. What does this mean? It means that when you start making $10,000, your earning income credit start, you have something. If you have 12,000, you have something, it increases. You have 13,000. I don't know where, I don't have the table in front of me to tell you where it's going to stop and start decreasing. So at one point, you have 14,000, it start decreasing. You have 14,400, it start decreasing. At the point that you have $15,980, and that is zero. Of course, if you have $16,000, it will be zero. Your earning income tax credit will be zero. Same thing for the person who has one dependent. If you have one dependent, your earning income tax credit phase out at $42,158. Okay, if you have one dependent. If you have two dependent, your earning income tax credit will phase out at $47,915. It means that if your earning income tax credit is $47,900 and $1,500, even though you have two dependent, your earning income tax credit is zero. And I have to go into this detail last year with a lady who made, I don't know, I think it was $60-something,000, and she got zero income tax credit with her two dependent, right? And she was start complaining, why is it that last year I have this refund and this year I have almost nothing? I said, yeah, when I brought her income to the same level that the income was in 2019, and then she saw what she received in 2019. So that's why you guys need to understand how your taxes is working. So I just told you for the 2000 for two dependent. For three dependent, if you have three dependent, okay, if you have three dependent, it will phase out at $51,000. So you guys, if you are working, you're not married, because this is, by the way, for single person. That means if you file tax, you're not married. Okay, if you are alone and you make $51,364, you will be zero income tax credit. That means don't say, oh, why is it that last year I received this refund and this year I received nothing? Because your earning income tax credit will be zero. If you make $51,464 this year, 2021, you will have zero, basically. That means you don't even see the impact of the chart, and you almost not see the impact of the twitch in your taxes. That's why you need to consult to see if your chart actually has an impact, because as you have a higher income, of course you are losing some credit that you can claim. Okay, so I just told you, if you are not doing if you do as a single also means head of household. When you start claiming dependent, they call you head of household. Now if you are married, then for the three dependent, if you guys income for you and your spouse is $57,000, okay, $57,414, then you lose your earning income tax credit. You have to know that. Don't say, why, but we are doing jointly. How is it that we don't get the income tax credit? Yes, if you are doing jointly and you guys combine income is $57,414, then you are losing your earning income tax credit. You have to know that. Okay, we go back. If you're a couple, you're doing married filing jointly, and your income is $53,000, 865. If you have two dependents, you're still losing the earning income tax credit. Now, if you have one dependent, it's a couple, and you are earning income tax credit, you guys combined income is $48,108. You lose the earning income tax. That means you have zero of earning income tax. In the few seconds, I'm going to tell you what's the maximum for you to know how to consider it into your taxes when you are working. Okay, so the last case is when you have no dependent and it's a married filing jointly status. That means you guys combine income is $21,000 and 920. Your earning income tax credit will become zero. That means you will not be able to claim no earning income tax. I told you it account for, I may say, 80% of your return, maybe 85. I just said that your earning income tax credit may account for maybe 80% of your tax return. Okay, so once I told you how it phase out, now I'm gonna tell you what is the maximum of the earning income tax credit you can get, whether you have one dependent, no dependent, two dependent, or three dependent. Listen very carefully here. Listen, guys, if you have no qualified child, that means you have no dependent, your earning income tax credit, the maximum is $543. Okay, if you have one qualified child, the maximum you can get for the earning income tax credit is $3,618. If you have a two dependent, the maximum you guys can get for earning income tax credit is $5,980. Now, if you have three dependent, the maximum you can get on the earning income tax credit, depending on, of course, what's the level. I just told you it's a range, but the maximum, depending on what's the level of income, if you have three dependent, your maximum you can get is $6,728. So you guys need to know how your tax gets together. Okay, yes, I don't know if you guys have a question, but if you have a question, okay, you may still drop the question on this description right here. Okay, drop the question right here. Or if you're watching on YouTube, drop the question in the description or the comment section of it, and I will always come back to respond or to get more explanation. And if you have a different topic that you want me to discuss about those minute of taxes, just drop on the comment section of this video, whether you're watching on YouTube, Facebook, or LinkedIn, or whatever it is. Yeah, we will consider it into choosing what to share with you the daily basis. So until then, see you tomorrow for the next numero. Ciao. That was Russell Follas, your tax and accounting specialist. Ciao.